Yeah, I have to wait. Yeah, the has to. Good evening, everybody. Please be seated. We're going to start now. I'm Jennifer Obrenda, Project Coordinator for Arise UAE, and I'll be your facilitator this evening. On behalf of UNDRR Arise UAE, we welcome you all to our first event of the Arise UAE series, Swimming with the Sharks. With this event, we aim to bring together the different players of the entrepreneurial ecosystem and collaboratively increase resilience. Today, our guest of honor, Minister of Entrepreneurship and SMEs, His Excellency Dr. Ahmed Baloul Al-Falasi, is known for his great impact on entrepreneurship and SMEs. Who better to talk to about this ecosystem than him? The stage is yours, Your Excellency.
So first of all, thank you for hosting me. I've heard a lot about the Capital Club, although I didn't find the time to come here, but now I have no excuse. And I guess I'll be coming more often with the membership. I think 2020, if anything, it taught us all the importance of resilience across the board, but more importantly, how vital startups and SMEs are. We've been forced to change our way of working, our way of even getting education, shopping, everything. Healthcare as well has been all transformed, and that has been done predominantly by startups. Throughout 2020, and we've seen the results so far, even within the MENA region in the UAE, the number of deals have increased, the size of the deals have increased. So really the VC landscape has not only navigated the COVID-19 storm, but has also managed to flourish. If anything, I think investors and policymakers came to realize that supporting this ecosystem is extremely vital. One aspect of it is funding, and I think we are lucky here in the UAE to be a hub for VCs within the region. If my memory serves me correctly, about 58% of all VC funding in the region comes through here. So the ecosystem is really welcoming. We have 200, different nationalities, multiple VCs, and I think growing organically. There are some gaps. We did our analysis. The majority of the funds here are either seed, pre-series A, series A. But as is the case, the supply of capital is in line with the supply of SMEs and startups. As they grow, we're now in talks with some of the funds introducing later stage, series B and C. We've also seen Nasdaq Dubai launch an SME-focused stock exchange. So we're now trying to build the whole ecosystem from angel investing all the way to listing within the UAE. On the lending side, it's a bit more tricky. And I think it's also a function of our financial systems. Our banks are big banks. Big names like First Abu Dhabi Bank, Emirates MBD. These are big multi-billion-dollar banks with assets that are largest in the region. So naturally, they don't look at SMEs. The cost is prohibitive when compared to big clients. And even on that, we're working together on the regulation to attract medium-sized financial institutions that not only have the appetite to lend and loan to SMEs and startups, but also understand the profile of these companies. We are not talking about venture debt. So how can you give a loan to a company that does not have solid assets? How can you guarantee to the bank some collateral aside from physical assets, equity, for example, within the company? So I think it's a learning process, and part of what we're doing right here is to engage with the ecosystem, to understand the gaps, to try and fill in the gaps. I also come from higher education. I was there for almost 4 years, and I'm happy to say that even from the culture side, we're witnessing an increased interest in startups. I think the figure I have was over the past 3 years, the increase of graduates who went into entrepreneurship is about 38%, 48 in 3 years. So again, everything looks nice. It's slowly but surely building up, and you're all part of this ecosystem. We're here to help you. We're here to listen, and I'm very happy to be here, and I'm glad I can't swim with the sharks yet. Maybe get a shark-proof suit, but until then, please feel free to reach out. I have Saeed here with me. He's my office manager. If you have any recommendations for us, who are right now as the Emirates, as the UAE government, really going back to the whiteboard, we're reviewing all of our regulations. Some of them have been announced. So for example, foreign ownership 100% has been announced. A long-awaited policy, which is a decriminalization of checks, has been announced. It will be implemented 8 months from now. So by 1st of January 2022, checks will no longer be criminal. This is something unheard of in the region, but I think it's long overdue. And we're looking to other policies as well. So from now until approximately Q4, we'll all reviewing all of our policies. So again, very happy to be here at Capital Club, and inshallah come here more often. Thank you for having me.
Thank you, Your Excellency, Minister of Entrepreneurship and SMEs. I would like to now call Dr. Mahmoud Al-Baray, Chairman of Arise UAE, to introduce UNDRR Arise UAE to all of us here. Thank you.
Assalamu alaikum, everyone. Good evening. I will not take so much of your time. Just to echo the message that His Excellency the Minister Ahmed said, if there's something we learn from crisis, it's being resilient. And this is part of competitiveness. If we want to be competitive, we need to be resilient and sustainable. Your Excellency, United Nations Disaster Risk Reduction Private Sector Alliance, Arise, have done a survey. And this survey showed that 51% of SMEs companies in the Middle East don't have business continuity plans. So we are here partnering with you and partnering with the Capital Club to build an ecosystem that's resilient, sustainable, to take our beloved country and UAE to the next level. So we deeply believe in the importance of partnership. We are doing this in accordance with Sendai Framework 2015-2030 to build resilient societies. Part of resilient societies is resilient businesses. UAE government has done a great job in doing great in health, doing great in economy. Both are going ahead. We're competitive. We're receiving the globe. We have 217 nationalities of investors. We have 52,000 millionaires residing in this country. If we look at the Eisenberg model of ecosystem, innovation ecosystem, it talks about leadership, we have it. It talks about culture that accepts risk and that celebrates risk. As much as we celebrate success, we need to celebrate risk and failures and learn from them. We need to grow our interest in human resources and in capital equality and attracting more FDI to the economy. So I don't want to take more of your time. Yes, who dared to swim with sharks? I think we need to be strong. We've learned something here in the UAE to be strong, resilient, and take the risk, and we will be rewarded for that. Thank you so much, Your Excellency. Thank you, everyone.
I'd like to now ask Dr. Mahmoud, Chairman of Arise, and Dr. Tariq Ahmed Nizami, Vice Chairman of Arise UAE, and Ahmed Riyad, Co-Chair of Arise UAE, on the podium to gift His Excellency Dr. Ahmed Balhoul Al-Falasi a plaque of appreciation for his presence with us tonight and all his efforts in further developing the entrepreneurial and SME ecosystem.
They get the plaque every time I come, or is it the first time? Every time.
Thank you, everyone. I would like to now leave you with our first session in Swimming with the Sharks, our panel discussion. The moderator of this discussion is our very own UNDRR Arise UAE board member, Zaina Abu Chaban. Zaina has more than 12 years' experience in creating successful startups with a social return on investment. In 2009, she launched Palace Style, one of the first luxury social fashion brands in the region. and impacting 4,000 refugees with social development projects. Zaina was featured on the 100 Most Powerful Arabs Under 40. May I ask Zaina and the panelists on stage? Thank you. Panelists, please can you come to the stage?
Hello and welcome everyone. Finally, we get to be together here tonight, in person versus all the Zoom and digital interactions we had earlier. So if at any point you hear me saying, please mute your mic or put on your cameras, I'm still trying to adapt, but I'll be there. But really, on a serious note, we are so happy that we are all together here. And Your Excellency, Dr. Ahmed Bilhoul Al-Falasi, Minister for Entrepreneurship and SMEs, it's an honor to have you with us today. So this is our first panel discussion in our series, Swimming with the Sharks, brought to you by Arise of the United Nations Disaster Risk Reduction Office. And together we are aiming to increase the resilience of the entrepreneurial ecosystem and bring together all the players. So let me start by asking the audience, how many of you started a business or are thinking of doing so? May I see some hands? Okay, that's a daring audience. How many of you are VCs or have thought of investing in a venture capital fund? Okay, great. So this panel discussion is definitely for you. Today we have 3 of the greatest VC minds in the UAE and 3 entrepreneurial success stories. Before I introduce you to them, if you have any questions, please write them down and we will give you all the space after this panel discussion. So to start with, we have from the VCs, our sharks for tonight, Medea Nocentini, COO at Global Ventures and co-founder of C3. Khalid Lababidi, venture partner at Arbor Ventures. Yusuf Ujidain, managing partner at 5 Class Global. Entrepreneurs, Nader Amiri, founder and COO of El Grocer. Reza Alavi, founder of Real Pilates. Faisal Toukan, co-founder and CEO at Zena. Welcome and so happy to have you here tonight. So let's get into the discussion. And my first question is a throw-on to you VCs. Are we in a VC bubble? I mean, with every crisis, there's so much opportunities. And we've seen that in 2020, we closed on a record high of $1 billion of funding for startups in the MENA region. And the UAE had the lion's share in terms of amount and in terms of deals. So what's happening? Is there too much money in the ecosystem? Could you tell us more? Medea, Faisal, go ahead.
I think this is just the beginning.
Okay.
And we're very excited to be. Can you hear me? Is it okay? It's really the beginning of a growth curve. I don't think it's a bubble. I do think there is so much more we can do as VC, as ecosystem players, as entrepreneurs. I do believe this is really just the beginning. That's my take.
Yeah. So my take is that I think we are, have lots of valuations that are happening now in VCs. I was just looking at some stats before I got here, and the value of a kind of an early stage funded company in 2010 versus now has gone up 3 times. And so the same thing has happened in later stage companies. It's gone up about 5 times over the last 10 years. And so I think, when you talk about like valuations and the amount of money that's in the VC community, I would say that there is quite a bit there. But I would also say at the same time that, we're seeing this in pockets. So the US, I think obviously has, lots of cash that's flowing into those kind of markets. I think in the Middle East, it's been great that we've had, over $1 billion, coming into the market just last year. But I still think that there's room for growth, especially in the Middle East. And I think there's still room for growth, as Arbor Ventures, we look at a lot of, Southeast Asian countries. And I don't think that we've seen the VC bubble there. I think the last thing I'll say is that, it's not just VC that's had an extended amount of growth. I think we also see the housing markets. I think we see, the stock markets. I think we see, lots of other things which have all grown in size. And so I think, VC is just, just one more asset class that's appreciated.
Thank you.
I think, to me, everything permeates from the public markets, right? So, if, you know, with everything that happened with COVID, you saw central banks printing, you saw an enormous amount of fiscal stimulus, and that traditionally most of it went to public companies, and it permeates down. So, if you look at late stage venture capital globally, you know, it's incredible what we're seeing. If you look at early stage, I think it's incredible what we're seeing. So personally, I don't think this will continue. How does that pertain to our region? I think it's good for our region. And there's a few caveats here, right? So if you look at, for example, what's going on in the Kingdom of Saudi Arabia, there are several government funds that have put a lot of capital into the markets. And I think you're seeing more inflation with prices there than anywhere else in the Middle East. But a lot of it's binary, right? What you'll typically see is the top 5% of startups, you know, and I think, so we invested in Faisal's company, Zena, and I would include him in that top segment because he was oversubscribed 3 times in the space of 2 weeks. And I think a lot of attention's being paid, a lot of attention's at the top 5%, but if you look at the mass, the 95%, they just don't benefit from that, right? So I would say, to answer your question, it's I don't think it will continue personally.
Okay.
I think it's crazy what we're seeing, not just in venture, but yeah, across all asset classes. But it's a function of printing.
I mean, there's definitely growth as you have seen, and we're going to be. And what's interesting is that there's lots of focus and depth as well in the level of funding. So that has been very interesting to see. But thank you, everyone. I will go now to the entrepreneurs. Please inspire us with your story. So what is the problem you are trying to solve? How are you solving it, and the market size?
So we started before COVID. I guess during COVID, we became an essential service. We're an e-grocer, grocery delivery marketplace. We started in 2016. And at the time, people were asking us, like, are you sure here in the region, is it going to work? We're like, yes, if we look at global trends, it will work. There's already a habit of calling the grocery to get it. And we're still at a very early stage in the market. Fast forward 2020 with COVID, it became an essential service. The market, and it's proved the market size and the potential is huge. We're looking at around 25 billion grocery markets in the UAE, out of which the e-commerce is still around 10 to 12%. So there's still a huge room for the market to grow. A lot of services, whether it's a digital service or it's a physical service, are still not being offered in the market today that you can find in other markets in the world. So we're at still a very early stage in the development. When we started, the ecosystem was still very young. So we did more of a friends and family sort of round. We did crowdfunding. We haven't raised institutional funds, which I guess we will tackle later on.
Yes, we will. Thank you.
Well, from our side, we have also been around for over 10 years now, 11 years. So I'm the founder of Real Pilates. We're in the health and fitness industry, very different industry, but complementary. So he feeds people and we help them burn the calories. We are, to use an expression from our industry, because we work a lot on the core, we are really at the core of resilience, in my opinion, because if we can contribute in helping people being healthy, in good physical and mental health, then obviously we're impacting across the board. So we're helping everyone. So COVID was challenging, of course. We didn't grow exponentially like some, because a lot of what we did was in physical space. So the safety guidelines that we have in place obviously reduce our capacity to serve clients, but rightly so, because we have to still stay safe. But as you can all imagine, the virtual side and online fitness has exploded suddenly. It was there, the big brands were doing them. So we went very rapidly. We pivoted around that within literally a couple of weeks. We had to come up with solutions, and it worked well. So we're quite proud of what we're doing in terms, much less of a business, but rather of and in that sense, I think I can connect with Zaina's personality in terms of social contribution and helping. because day in, day out, we can see people building that strength, regaining trust, regaining confidence simply because they're healthier. So my story of inspiration is just that, I do what I love with my team. I left the corporate world precisely to do this, so I couldn't be happier. And thank God, alhamdulillah, I mean, we're definitely around. We are growing on one side, and on the other side, we're just waiting for restrictions to be lifted to regrow again, because we were continuously, health and fitness has been exploding around the world. Like the sector is exponentially growing. It's one of the fastest growing sectors worldwide. So we're very blessed to be here because we can still operate. And I'm connected to a network of similar individuals in Europe and in North America and Australia. And I can tell you 99% of them envy us because we're operating and we're doing well. So that's our story.
Thank you.
Great. So we're Zina, and we're a fintech. And the initial problem we're solving for is pretty straightforward. It's to remove cash out of the equation. So anything from buying a cup of water with a friend or buying a cup of coffee to settling the rent bill. And then the goal of Zina is to eventually become basically a financial aggregator, a platform for the next generation. What that means is basically, if you want to send money to your friend in Saudi Arabia, you can do that. If you want to buy a cup of coffee, you can do that with Zina. If you'd like to invest in US equities, why not? You can do that on the platform as well, but all goes with starting with one problem, which is basically removing cash. How does that translate into COVID? I think it's pretty straightforward. People don't want to touch cash anymore. And digital payments have accelerated significantly over the past year. So I think the equivalents for comparables across the world have seen 40% increase in usage on average. So Venmo in the US, Cash App in the US, WePay in China, they've all become standardized. And what we want to do basically is help facilitate that in the UAE. So
Thank you.
That's what we're doing.
So building on the previous question, so you as VCs need to obviously know about this, about the entrepreneur coming and pitching to you the problem, how they're solving it, the market size. And at the same time, the entrepreneurs need to know before they pitch to you as a VC, what is your investment thesis? So maybe you can introduce yourselves to the audience and tell us about your investment thesis. What is the industry you invest in, the stage of the company, the region, and the size of your fund, please.
Perfect. So I can start. Global Ventures, we have one fund, which was $50 million, that was focusing on enterprise SaaS. So it's mainly a portfolio of B2B enterprises across sectors. That's already deployed. So we are now on some follow-ons, and we are looking at helping those companies thrive. As any other VC, we focus a lot on value creation. And we have here the head of value creation in the audience, Saeed, which is leading that part of our business. The second fund, which we are fundraising as we speak, is more focused. First of all, the region is the same, so it's the MEA region, Middle East and Africa. The second fund is more focused on digital health, edutech, agritech, and all those interesting growing sectors that are, we call it growth sector after pandemic, but they were growing even before. It's just that the acceleration of the growth has been incredible. We had already invested in a few health tech companies in the first fund, but the second fund has a mandate which is quite specific on digital health. Again, Series A typically, or around that, pre-Series A, or in some cases pre-Series B. That's the stage we're looking at. And I just want to give a stat. So from the get-go of the first fund, we have looked at almost 3,000 companies. Wow. We have invested in about 30 right now. Little less. So it's less than 1%, and that's really the. So when we don't invest, it's not because the company doesn't have a future, doesn't have growth potential. Quite the opposite. We see so many amazing founders in the region. It's just that we need to make some choices. Most of the choices are based on the mandate we have, and some we can detangle later what we're looking for as VCs, but some of them are general choices, I would say.
Tough choices always.
Yeah. So Arbor Ventures is a VC that is based out of Singapore. So We predominantly have our roots in Southeast Asia. And so most of the things that we invest in are fintech. We have LPs like Visa and AXA Insurance. And of course, they come to us with ideas all the time. So we've done mostly Southeast Asia and then the US. And then the Middle East has kind of been something that we've done just last year. And I think the reason why we've done it, relatively recently is because we're seeing a lot of things that are happening in the Middle East were things that were happening in Southeast Asia maybe, 3, 4, 5 years ago. So we're here to kind of, make sure that we're part of that next wave, but also at the same time, learn from the region about, new things that we can come. So where do we invest? We're usually seed to A, specifically in Southeast Asia and the Middle East. And then we will do later stage companies that are usually in the US, but those usually are ones that want to come into Southeast Asia. And so, our value add is that we have those connections. We can help them, do soft landings into new markets.
Thank you.
So Class 5 Global, VC firm headquartered in San Francisco, over 100 million in AUM, early stage investors. So we've made about 15 investments out of the first fund. Over 2/3 of them, we were the first institutional investor. So like to get our hands dirty, like to invest early. Predominantly focused on fintech and fintech enabled businesses. And we're a global firm. So I lead our investments here in the Middle East. We have 5 partners and around half a dozen venture partners, but quite thematic in our focus around fintech. So we love neobanks, we love remittance, we love prop tech.
Thank you. So this is really exciting. We're looking at a combined fund of over, just in this room, $400 million, focused on tech almost. So it's exciting to keep this as a note audience. But Nader, going to you, I know you have been through investment pitches. Can you share with us what do you look for in an investor?
I think in our case, we're looking for someone who understands the industry.
Mm-hmm.
Our industry is a bit more competitive and challenging than others. Thinner margin, which makes it a bit more difficult for someone to look at a much longer term view, which makes the ticket sizes and coming in a bit more difficult to come into. So we had a lot of discussions with a lot of VCs in the region, and we found that it may not necessarily be the perfect fit from both sides.
Mm-hmm.
Because when we're looking at grocery, we're looking at someone who can add value, not just from an expertise, money, and other kind of networks and connections, but also potentially assets when it comes to either logistics or some part of the value chain, where they can also support in scaling up faster, given the market dynamics, given the industry dynamics. So that's what we're typically looking for, someone who can add value more from an industry experience, whether it's on the technology side, or it's the logistics side, or it's the brand side. These are the things that we're looking more towards, being part of that journey in terms of accelerating it for ourselves and for the group that we would be working with.
So I hear you saying mostly the know-how. This is very important for you.
Absolutely.
And if I may add also, it's very important for an investor to know that a bad day might be coming and that he's ready to support the entrepreneur when this bad day hits. So going back to the VCs, Khaled, what other options of funding are available for startups? And is VC funding the only or best option?
Yeah, I think what we've seen globally is we've seen different types of fundings that have happened. So His Excellency was talking about venture debt. So venture debt is obviously something that we've seen, prolific over the last 12 months. And I think, this year we've had the most amount of venture debt, ever. What we're seeing, for example, in places like the US is that 2 things are happening. Number one is that the VC space is obviously growing. But I will say is that there are some who are looking at different options than just the traditional VCs. Number one, you start to see a lot more angels who are coming into it. And I think this is interesting because you have things like Angel List to allow people to, not necessarily have to invest, $100,000 or $1 million into it, but really start to get in at 5,000, 2,000, or whatever it might be. So I think even at the early stage, you're starting to see a lot more of this friends and family come back, and so that's one. Two is kind of the VCs are really great. Once you get past the seed, I think the Series A, I think they're really wonderful, and especially if you're talking about SaaS companies, there's new companies like Pipe or Clearbank, who are essentially there to finance your SaaS businesses. So what they'll do is they'll say, okay, you have a Netflix subscription that you're going to pay for a year. I know that you're going to pay $10 a month. You know what? I'm going to finance you the $120 right up front, and then you can go out and basically get the next client. And so when you start to do that, that starts to mean that you don't get diluted from your Series B all the way to your Series D or E, and you can just fund yourself through debt. And the equity stays working on core things like marketing, core things like team, core things like technology. And then I think the other thing that's happening is, of course, the SPAC market is really opening up. And so you're starting to get a lot of SPACs that are happening a lot earlier. And the reason why SPACs are there is just because, private equity markets are great, but public equity markets are even bigger. And so you'll start to see a lot of those come out. So I think it's going to be interesting for the VCs over the next couple of years of what's going to happen. I think, we're really going to still stay at the beginning side. I think we still have something to do, in the middle, but maybe not as much.
Yeah, absolutely. But thank you. I mean, there are lots of options, as you said. So if you look from angel investors to VCs to syndicates to capital debt, I'll go to you, Medea and Yusuf. From out of all those options, how does the entrepreneur know if VC funding in specific is the right fit? Medea.
Now, first of all, it depends at what stage of the hockey stick they are. Typically, a VC will look with interest at companies that are at the beginning of that curve. And if the enterprise has a model that can scale very quickly, I do think it's VC material. And the partnership will benefit both sides for sure in the short and the medium and in the long term. When it comes to companies that have a more steady growth, perhaps VC is not the best model. A lot of pressure will be put on the entrepreneur to grow quickly. So eventually that's where venture debt could be a better option, or in some cases, patient capital, which we don't have yet in the region as much as we would like, which is different asset classes of investors that have a little bit lower expectation in terms of returns, because they look at impact or they look at other economic benefits and societal benefits. There are other options which, again, are at the very beginning right now, which are, for example, royalty-based capital, which is used in films a lot. That's how films get funded. It's starting in the enterprise space as well elsewhere, not yet in the region. I think this will come because there are plenty of companies that shouldn't go to VCs right away. VCs is a model that requires a certain level of structure from a governance perspective, from a finance perspective, from a regulatory perspective. And again, some entrepreneurs might not be ready or might not need to get into this kind of structure from the get-go. So it really depends on the business model, I guess, and the sector and what the VC can bring to the company. Certain VCs are more regional, certain VCs are looking outside the region to help entrepreneurs grow. So depending on your strategy, on the strategy of the enterprise, then a VC might make sense vis-a-vis another VCs or not. So it's very important to know, one, is VC the right capital source? Two, is that specific VC the partner that will bring the company to a completely different level in a span of 1 or 2 years?
Thank you. Yusuf, would you like to add anything?
She summed that up very quickly.
Thank you. So building on the discussion of the whole capital options, Faisal, Zena just finished a successful round of investment. Congratulations. And you had a great strategic mix of local investors, Silicon Valley experts, and fintech operators. Can you tell us more about this experience?
So fundraising is interesting because I think every founder kind of goes into it, reverse engineering what the optimal outcome would be, right? This doesn't always work out. But with fintech, so I'm gonna give my experience. With fintech, it's a different beast. Super capital intensive, extremely expensive. It's an expensive endeavor, and we need to be aware of it, but it makes it a very good venture business because it's high growth with a high burn. So it's a codependent relationship with the VCs. With that, we touched on this before, there's the kind of level of growth firms in the US that need to be able to deploy that level of capital. So growth US investors, check. That was the first kind of box. Second box is local know-how. Having local, basically, investors here that know the market, know commercial partnerships, know how to navigate regulation, become a strong partner on the ground that you can talk to on a day-to-day basis. That's basically the second box, right? So that's check number 2. And finally, the operators are my favorite part because we have people from Revolut, Stripe, Brex that come in, and I get to annoy them on a daily basis on WhatsApp and basically ask them questions from risk and compliance about hiring, and they interview some of our candidates as well. So having those basically in the details on a day-to-day basis. So we kind of reverse engineered it and worked backwards from there, but that's what we're looking for.
Thank you. And Riza, from my understanding, Real Pilates was one of the first Pilates providers. Within a very short time, you were able to expand in different locations, each with different licensing requirements and challenges. Yet you did not raise capital. The expansion was self-generated. Have you thought of raising capital? And if yes, what are you waiting for? And if no, what's the reason?
So I was waiting for these 3 people. No, I didn't think it was self-generated for us. So the first one was obviously personal savings. I had lived in Dubai for years and it was self-funded. And then the business funded the rest. So the first studio funded the second one, the third one. I'm quite proud because the third one opened during COVID, which is pretty good, and in a new area. So lots of challenges there. Why I didn't go for that? I think there are a couple of elements, to be quite candid and honest. I think there's a cultural element or maybe a certain cultural aversion towards maybe that kind of funding because of upbringing, because of culture. I do think that it plays a role. It shouldn't be neglected, which is something I possibly would need to work on, and I have been, and I think there's a shift in mindset that needs to happen at a certain specific stage of the growth of the company. Going forward, it may be something that I would want to consider. And the other second reason is actually very much connected to what Medya was saying, and I would transition very smoothly from that, is that indeed, certain fitness businesses could be, but generally speaking, it's more of a steady growth type business. Therefore, maybe not as attractive or as interesting for the VCs. So it's kind of, it goes both ways. The third element, again, I wouldn't underestimate it. It's the fact it's a strategic choice. It's a matter of choice and how you wish to live, how you wish to grow, how you want your growth to be, at which pace, and for what purpose. So if it's purely P&L, money, profit-driven mission, of course, certainly you might want to consider and open so many branches, and there's definitely still potential in Dubai, in the UAE, and across the region for sure. But if your goal is more to really do, like it is in my case, a very gradual but very deeply rooted qualitative work, so it's a bit more steady type, it's just a strategic choice, So it might sound odd or maybe not interesting to those who go through those channels, but that's my story.
Absolutely, and that's an option, right?
Yeah.
Of funding. So now they're talking about strategy. I know that we've discussed it before, VC or not for you, and I remember you told me VC is not the best fit for a grocer. You touched bases upon that, but if you can elaborate a bit more.
In our first round was friends and family. Friends, family, and fools. And then what we did was after that, it was around 4 or 5 years ago, we noticed that in the VC space, looking again for high growth, it was too early for us. So we looked at what are other alternative options, and we went for crowdfunding. It was something quite new in the region, and people were telling us, crowdfunding, how much can you get from that? Is it going to be enough to grow very fast? And we're like, yeah, today we're building the company. It was not necessarily about growing very fast. It was about setting the foundation. Setting, the base in terms of technology, team, business, brand, and all of that. So we actually ended up doing 2 rounds of crowdfunding, and it has helped us build the brand and build the company the way we want to do it, without the extra pressures and, okay, we need to do this and how much do we burn? And like we want to build a brand, we want to build a model that is not necessarily high burn, move very fast, but build something that doesn't necessarily need to be number one in the market or number two, it can be a good number three, but with an alternative approach of having a steady brand that can serve the customers, that can have the right level of financials behind it over a longer period of time, given the industry dynamics.
Sure, thank you. And again, talking about that, and here this is the question for the VCs. When entrepreneurs come and decide to pitch to you as an option, what are the tips and tricks you would actually give them at pitching? And if I can hear one tip from each one of you, would be great.
I think the first thing is to really believe in the business you created and you're running, and have your data ready, have your strategy strong. And again, we always say the first 1 minute is the most important, but in reality, at least at Global Ventures, we have a 4-step due diligence process. So I would say there's plenty of time to discuss the business and the growth potential. But knowing your numbers, knowing your market, and believing in what you're building very strongly, that's for sure one thing that we look for.
Thank you.
Plenty of others.
Khaled.
I would echo what she's saying, is that you only have a couple of minutes to really get the idea out there. I would say you probably don't need a slide deck that's 35 or 45 slide deck. You probably need 5. You can really tell the story right away. I would say the other thing is that there's a difference between people who come in and really know their numbers versus those who don't. And we probably have all heard kind of the same tips and tricks of making sure that you know what the TAMs are and all that kind of stuff. But it's about being able to kind of drill in to some of the regular stuff like the TAM and say, well, I know exactly what that TAM looks like, and I know exactly how I'm going to go out and get it. And these are kind of the 5 things that I need to do. That changes the conversation from what you would normally see with let's say an ordinary entrepreneur versus somebody who's really there to kind of move the business forward.
Thank you.
I think it's a narrative. A lot of it is confidence and how well you can tell a story. Fundraising doesn't always reflect the fundamentals of a business. You have some entrepreneurs that are just incredible at fundraising, and you have others whose businesses could be incredible, but they're not the best. So I think what we try to do is, one area where we try to help our companies is with recruitment. And I think it shouldn't, as a CEO or as a co-founder of a startup, it shouldn't necessarily be you that pitches. You need to hire someone for that role, or you need to allocate that role to someone. Everything's confidence and narrative.
Thank you.
It's pretty bizarre.
Great tips, thank you. And I'll leave His Excellency has a question, so we would love to hear it.
So that I can't be here and not use the opportunity and get the chance to ask you guys a few questions. So we spoke about the development of the ecosystem, and Yusuf, you spoke about Saudi Arabia, about the inflation to some extent of valuations. And that was an effort for the Saudi government to really, let's say, catalyze the ecosystem. Here in the UAE, we believe in organic growth. We believe in free markets. Yet we still see that there are some gaps. So for example, Medea, you mentioned the patient capital. So we're asking ourselves in government right now, is there room or necessity for a fund that will have a complementary play? And if so, would it be the patient capital that goes after slower growth companies or healthcare or maybe food-related businesses? Or could it be, like Yusuf mentioned when you said, we get the 5%, but then the remaining ones might be really good, but there isn't enough capital in the room. So we want to step in when we are needed, when there's white space, but not overstep in private sector. So the question is quite open. So think with me, if government at all is to establish a fund that's complementary, how would you envision that? Thank you.
If I may, and we are brainstorming right now. There is definitely a need for a few different asset classes, particularly when it comes to companies that have a mix in their mission. They have a mix between business and societal impact. There is not a lot of outlets for them to pitch their company because, again, we have specific business models, and we need to find those companies that have that hockey stick. So a lot of the companies that really bring benefit to the economy, to the community, don't have that hockey stick, and they shouldn't because of the nature of this business. For those companies right now, that is not available, basically, if nothing has come up in the past few weeks, because banks are looking at certain sizes, and the patient capital is not yet there. It's not widely available globally, but in the US and in Europe, we see some funds that have been created with both donors, governments, and private investment, and they invest in different asset classes that could provide, on average, globally, those funds provide about 5.8% returns, which eventually for a VC will not be a very exciting return. I think collaboration in this case is key, because this kind of investment vehicles cannot be completely privately led, because they really need to align with the needs of the country, with the needs of the region. And I do believe it would be phenomenal to have that kind of collaboration and have different vehicles available.
Thank you.
Sure. I guess from my side, it really depends on what it is that you're trying to get from a government point of view. If you're trying to, spur more entrepreneurs, then yes. I mean, I think there probably still is some space for more VCs to actually come in. I think the one interesting thing that you see in Saudi Arabia is that you start to see a lot of VCs who are, $25 million checks, which is fine. It gets you to start and do enough of the smaller deals. I think if there's the other side, which is, you want to keep these companies that you've started here in the region and keep them, let's say majority owned in the region, or majority funded from the region, then I think you need the larger funds as well. So I think right now we probably don't see anything past Series B in this part of the world that can really be funded by any of the VCs so far. And that's when you start to get a lot of the global companies who will come in and start writing checks and take those checks as well. So I'd probably say, if we want to keep those companies in the Middle East, then I think that's probably something to look at as well.
I think the focus should be policy reform. I personally don't believe that government should be investing directly into startups. This is my personal opinion. Perhaps there should be some stimulus into funds, so indirectly investing into startups. Yeah, that can be beneficial. But for me, everything starts at policy reform. That's the most important thing. And we invest globally, right? So it's always nice to compare how we look at the Middle East with Southeast Asia or Latin America or even the US and Europe, right? To me, one of the biggest challenges we have in this region, and this is from speaking to investors globally, is that it's very fragmented, right? If you look at Europe, if you're a fintech startup in London, or Berlin, you can passport into other countries. The problem you have in this region is you have to get the license from, the FSA or DGM or the UAE Central Bank. You don't have to go to Saudi to get a license. You don't have to go to Oman to get a license. So the addressable market is very fragmented. And that's a lot of concerns, particularly in fintech, are around that, right? But at the same time, it's very, very challenging to overcome that, right? And it will take time. So I think personally, there is enough capital in the ecosystem here. I really do believe that. And to your point about what the objective is, the objective if you think about it from a government's perspective here, is a lot of it is around employment, right? And you see SMEs contribute the most to employment. I think it's like 50% in this region or 55%. And I think why you're seeing a lot more capital go into technology, and I think it's, if you have a look at, for example, the biggest companies in the S&P 500, if you look at it 20 years ago versus today, right, you're seeing the lion's share of technology companies versus 20 years ago, it was oil companies, banks, and so forth. So it's crazy to see, but you're even seeing now hedge funds starting to invest in like Series A and Series B deals, because technology is a zero-sum game, right? So if we built, for example, a Netflix competitor in this region, right, we would be spending that money on this Netflix, this Arab Netflix competitor, right? And then that money they would pay to their employees. Their employees would spend that money in our economies. But today, we all have Netflix, right? And where does that money go, right? It all goes to. So I think it should be, it's paramount for this region to build these companies. And I think the only way to do that is for the governments in this region to work together. Because at the moment, it's too fragmented, and there's everyone's working in silos.
Sorry, if I could just say one thing. So I agree with a lot of things that Yusuf is saying. The one thing I would challenge is that is just the amount of capital that's in the region. And I agree that there's lots of capital in the region. The problem is that it's very concentrated, especially here in the UAE. I mean, if we're talking about UAE funds, we're talking about Global, we're talking about Beko, we're talking about, maybe you could probably count them on one hand, and maybe two hands if you wanted to do it. Those who are anything that's above, let's call it $50 million. The one nice thing that's kind of happened in Saudi is that you do have a lot of these smaller funds, and if one of the five didn't like you, then great. There's still a longer tail of 10, 15, 20 other funds, who would be interested in going in something like this. I think the other thing that happens is that for example, let's talk about buy now, pay later. We've invested in Tabi. That probably means that we cannot invest in any other, buy now, pay laters. And if there's more than 5 buy now, pay laters, and each one has taken one, then the 6th one that comes, has nowhere to go because there's just no other funds there. So I agree that there's lots of funds here. I would widen it out.
Thanks, Garrett. Moving to the entrepreneurs, and Riza, I would like to pick your brain on something here. So a lot of what we talked about is, pitching tips and raising funds and options and so on. And the essence in it lies in actually believing in yourself and accepting no fear of failure and rejection. And according to a report done by the Global Entrepreneurship Index, 65% of the people in the UAE are confident in their ability to start a business. And that's a high percentage. Yet only few of them do that out of fear of failure. So briefly, in your view, and being resilient yourself, how can we change that to achieve true entrepreneurship and innovation?
I think one of the biggest ingredients is courage, just having the courage at the right time, obviously, because I've come across many friends or contacts, having been in the consultancy business before, management consultancy, friends who come, or people that I know who come to me with ideas and say, and they really do great ideas, but they hesitate, they procrastinate, they wait, they don't believe in themselves, they're not sure. So I think many a times here, what I've noticed, it's a cultural thing, is that unlike in the US where you could do something, fall down, stand up again, try again, maybe 3-4 times until finally you nail it and you create a successful business, there's a little bit of apprehension and fear around that idea of failure, because of course there's an element of risk. You could fall, you could fail completely, you could lose. If it's self-funded, it's even more dramatic because it's your life savings. But but that can be overcome through better planning, better business strategy, and talking to the right people. So networking is essential, is very, very important. And then at some point, I think I would use the example of Dubai. Dubai is a place that I personally perceive as where things happen. So you need to get to do things, and even if it's not perfect, you can fix them as you go, provided you've created at the beginning you have the right overall system, so you pass a certain tipping point. So in our case, I knew that we had, for example, a solid business plan. There was a niche in the market. There was a demand for it. I believed in it. I was really passionate about it. It wasn't just purely for the objective of a certain profit. So there was a bigger, more aspirational goal on top of the business plan side. So it was easy to start. And of course, I made mistakes. Everyone does. And we learn and we fix them as quickly as possible. So that agility. Now, Dubai, in many, many ways, it was the absolute ideal place where I could have done that because the ecosystem allowed it. And it was it's allowed me to do what I did. But in some other areas also, there are around policy. Now, it's not necessarily around VCs or funding, but it's more around the regulations, whether it's immigration, work permits, labor, banking, etc. There's so much that could be done and streamlined. My friend here was talking about fragmentation on a different dimension. There's just local fragmentation. I have 3 studio locations. All 3 of them are 3 different license types. Every one of I do literally the exact same thing for the first one, second one, or third one. There are 3 different methods I need to follow, or 3 different processes. Whereas I'm in the same city, they're literally within 15 kilometers of each location. But one is a free zone, one is not a free zone, one is within a particular type of a zone. So I would say, yeah, the courage, better planning, accepting the risk, and then if the government can help through different policies and the right policies, agile to provide that extra security or that extra support, could potentially work.
Thank you. And building up, it's also like accepting failure as a learning, and this is a culture we want to work on and shift from failure to actually it's a learning. In Silicon Valley, the more you fail, if you have a track record of learning, then you are more valuable as an entrepreneur as well. Thank you. So VCs, I think at this point we're really curious to know that given COVID, how did it change your investment decisions? Where is venture heading in light of COVID, and any advice to startups where to seek those opportunities? Briefly, please, Medea.
Luckily enough, or strategically enough, the first portfolio of companies we had at Arbor Ventures was very resilient, if not thriving during COVID. So I wasn't yet a part of the team, and Saeed was already there. Our 2 general partners, when COVID started, of course, they created a system of weekly meetings, multiple calls, just to make sure that the portfolio was all okay. And in reality, most of the companies, because they were business SaaS and enterprise SaaS, B2B technology-based, I would say at the edge of what was needed during COVID, it was all looking good, and it still does benefit the full portfolio from the new dynamics in the market. We had already 1 investment in digital health, and that, as you can imagine, just skyrocketed during COVID. Hence, the second fund has a big focus on those sectors that were already interesting, but I would say they had an additional spin in terms of growth potential. So COVID has actually, again, if we want to find a silver lining in the pandemic experience, that there has been what we all know are not always pleasant, it has been helping businesses that had a huge potential just to go to a very different level, and everybody realizing how important it is to invest and to support companies that bring thick value to the society, to the community, to the economy, and not only the more fashionable, if I may use this term, or the more fun and attractive businesses. I think we had all stepped back and look at businesses with a slightly different eye during COVID.
Thank you. Khaled, do you want to add something?
Sure. So from our side, we kind of did the same thing once COVID happened, which is that we reviewed the portfolio. I think of the 29 companies that we had, I think there was 2 or 3 that, eventually closed down. But honestly, I think with COVID or without COVID, they probably would have closed down anyways. What's interesting is that, companies who are resilient, is definitely one thing. The other thing is that we found that there was different types of entrepreneurs that we had. in our portfolio companies. We had a really interesting entrepreneur who was in a health tech company, and we thought, he's going to ride the health tech wave. He actually pivoted his company at that point, or he kind of put it onto the side, and he opened up a PCR center in the US. In 1 year, he did $80 million of revenue. That will now fund him, for the coming years. The other thing that happened with him was that he found out that the payment process on the PCR side was a really broken process. So he actually, pivoted again, and now he's a health tech payment company as opposed to a health tech, delivering services. And so I think, the one thing about COVID that we learned is that, when you find a good entrepreneur, he will make things happen. And so back the entrepreneur, especially when you're talking about seed and Series A, he'll make magic happen in B, C, and D.
Thank you.
I think I'll take a stab at the latter question. I think just follow interest rates. I think once we understand where interest rates are going, it will tell us a lot about what's going to happen with venture. Because obviously at the moment, there's if the discount rate is super low, then so much money is going into riskier assets, right? Because fixed income isn't giving you any yield. But with all the printing that's going on, with all the fiscal stimulus, infrastructure spend, if you start to see inflation go up, then most likely interest rates are going to rise. If interest rates rise, you're just going to see capital go from one asset class into another. So it's going to be interesting to see what happens with venture capital. But at the moment, it's pretty crazy, to be honest.
Thank you. So as we're approaching time, in summary, we have really the solid building blocks of a thriving entrepreneurial ecosystem. Startups have multiplied, investors have increased. We closed at a record high last year. We talked about today, funding, the options, pitching to investors, changing the culture of investment, changing the mindset of entrepreneurs. Thank you to all your valuable input here. We're really all of us in a mission to put our hands together and take this ecosystem to a deeper level. So with that, I will thank the panelists, and I will leave the floor, of course, to audience to take a few questions. I can see a hand here.
I think I'm not enough.
So we'll take about 3 questions. Thank you.
Good evening, Your Excellency and the distinguished guests. I think I have an observation, then a question. So my name is Deepak Ahuja. I am a banker and entrepreneur. I have interest in insurance tech, edutech and health tech. So Arbor Ventures, I think I'm going to be your next customer. I think there was an observation in the beginning made that $1 billion was invested in 2020, but that may not be sustainable. I think then there was a good second point made that there is enough capital available in the region. So those are two contradictory things. Now, in the last 2.5 years since I've left my investment management job, I've been educating my own set of investors on the startup as asset class. I think there is a gradual conversion happening. So my question to the VC team here is that, in terms of education, there are, I think Mr. Burai mentioned there are 300 plus millionaires in Dubai, and there are n number of HNIs who invest in different asset classes. What is the role of VC to educate those investors on a startup as asset class? I mean, I'm doing my bit, but I have a small reach. Is there any effort being made from your end?
Just, if I may take a stab at the first point, the reason I think there's enough capital here is because if we've learned one thing from COVID is, this whole remote working is here to stay. So I think capital will be allocated in the most lucrative opportunities that investors find. So, for example, how many VCs you speak to in the US in the past 3 weeks? Honest.
Probably 82.
82.
So my point is, it's so easy now. Like, we've been investing without even meeting entrepreneurs, right? So it's so easy now for a VC in the US or Europe to have a remote call with Faisal and say, yeah, I'm investing. So I don't necessarily think we should look at it as, there's only 6 VCs on the ground in the Middle East. The best companies would be funded, in my opinion.
My point was that the investors in the UAE, the HNI, the retail investors, and we spoke about angel investors, there's education required because they want to invest in startup, but they're always worried because there are not too many exit stories here, not too many liquidity events. I think that's what is required in terms of education journey, because you can get the capital from within the GCC and UAE itself, from the investors. And we're sitting right in the middle of PIFC. I mean, there are companies and banks who manage hundreds of billions of dollars in terms of AUM, but none of that money gets trickled down to the startup world. So there's an education bit required. And is there anything that is being done by the VCs? And three of you are representing companies from your end.
Look, with our job is not to educate investors. We have LPs that are very well ready and educated to invest in our fund, and then we deploy the fund. I do think until a few years ago, the ecosystem was not as rich as it is now. 10 years ago, we didn't have such a pipeline like we have now. So it has started recently. Investors here have been investing elsewhere for so many years, right? In the US, in Europe, in Africa, elsewhere, in India. Now that the ecosystem has so much more opportunities, the investors are looking with interest, not only the local ones, but also the international ones. So I do think, first of all, I don't think we have resources and time to educate investors. As we see, we have a lot to do in analyzing the pipeline and making sure everything is done properly. Regulations are coming. We have now a really thriving ecosystem. Because since long, I started a social enterprise platform called C3. We started 10 years ago. That's how Zena and I met back in the days. I've been observing the amazing growth that the ecosystem has had. So I just don't think it's a need. I don't think it's a need.
Thank you.
Well, I don't want to make it a monologue, but I will tell you a story where I've seen the education helping. Thank you very much.
Thank you. Any other questions? So with that, we'll end our panel discussion. Thank you so much for every single panelist today. Your input has been great. Thank you to the audience. Thank you.
Thank you for the inspiring discussion. May I please ask the VCs and moderator to stay on stage for our next session, Pitching to the Sharks? Medya will be switching gears with her colleague, Said Murad, operating partner at Global Ventures. Thank you, Medya. Welcome, Said.
So basically, with this session, we have startups in the audience who have registered to pitch to our VCs, our sharks today. And it seems to me there are 6 brave startups. And just to add some suspense, I will pick up a name here and call the first person to pitch. But I would like the audience opinion as well. So we said they have to pitch in 170 seconds, which is 2.8 minutes. Shall we round it up to 3 or stick to 2.8? What do you think? Oh, come on. That's it, 2.8 or 3. We go up for 3. Okay, then. So 1, 2. Go Bazaar, Mahmoud Akram. Go Bazaar. I'm not checking my mobile. That's my stopwatch. So.
Hello, good afternoon.
Yeah.
Sorry. So,
Yeah. 1 second. Let me put the stopwatch.
yeah.
Go.
Hello, good evening, everybody. My name is Mahmoud Akrim. I am the founder and CEO of GoBazaar. GoBazaar is a price comparison platform which is allowed the consumer to compare multiple products from multiple merchants, or let's say e-retailers, in one single page. So the problem is, as per the research, 74% of the consumers, they are like to compare from different merchants, and they are going from page to page to get the best deal. And the problems from the merchant side, it is the high acquisition cost and the high marketing cost. The solution is we come with a price comparison platform, which is allowed to compare the product. So for the consumer side, we will give him a multiple choices to choose the best price in single click. And for the merchant side, he will pay per acquisition. We did our MVP, marketing minimum viable launch. So we realized there is a huge interest in this one. And in 2 months, we reach 4.5 million sessions on our website. And we were the #1 app trending in App Store. So our USP is the high accuracy and data mapping. In the previous, we saw a lot of price comparison website, which is providing the solution, but there was a lot of gap between the accuracy and data mapping. And we solved this problem. And we have our internal tech team, which is based here in Dubai. So this is our differentiation from the competitor. Regarding our business model or revenue, so we are charging cost per click, which is for our USP, and the revenue sharing. The partnership is done with all the affiliator program, the major affiliator program in the market, with Amazon, with Admitat, CG, affiliation. And after 10 days, we are going to proper launch to version 2.0. Thank you.
Thank you. That was 2.5 minutes, by the way. Can we please hear your feedback on GoBazaar's pitch?
Interesting. I'm curious to know how you plan to own the consumer. So when a consumer comes to your platform and does the comparison, effectively what then happens is you've monetized on a one-off, right? You're saying it's on a cost per click?
Yeah.
Okay. Do you plan on owning the consumer, trying to bring them back to GoBazaar rather than ultimately them going directly to a platform where they've enjoyed a strong customer experience, for example?
So look, in this world, everybody loves the bargain and every love to save the time. So when the customer, he will come, he will see, he get the best product, the same product with the best price, and we are not charging him anything, and just we are serving him, he will love to come again. How we are bringing him again? We are bringing him again through the social marketing.
Any feedback, tips, tricks?
Yeah, so I'm going to reiterate what was said. So there's lots of price comparison companies that you'll find out there, and usually what happens is that people will have to do price comparisons on things that are, let's say, they're relatively commoditized. So whether it's a phone, you compare one phone from another phone to another phone. And eventually what you could do is, the person will just go back to the original place where the phone was, as opposed to, buying it on your website. What I'm starting to see now in different parts of the world is that people want, to understand what the differences between these phones are, as opposed to just, simply you have, A from here, B from here, and C from here for exactly the same product. So it's kind of coming back to how do you own that consumer experience? What is it that the customer is looking for? What's that next, maybe it's not version 2, but what's version 5 or version 6 of GoBazaar? Where do you ultimately want to be? Because price comparison will become a commodity as well.
Okay. Regarding the customer, what he's looking for to do the spec comparing, the specification comparing, and he want to get the best deals. We are providing him the both in one platform. So you will have the specification comparison between all the phone, which is 100% mapping correctly and data accuracy. So, and it's searching, it's updating per millisecond. So now if you are a customer moving inside our website, you will update our website. by yourself. So we reached that level of the accuracy. Second thing, just what is about the another part of your
The
question?
other part is what do you eventually want to do? Like what's version 5 just after?
Let's speak version 2. By end of 2021, we are covering all GCC. And let's see level 5 of GoBazaar, we are covering all the needs of the humans' needs in their phone. So now you have 100 app in your phone, insurance, telecom, flights, booking, retails. We are covering all of that. You just need GoBazaar in your phone.
Thank you. Thank you very much. Thank you. Okay, so second. Holly Tour, Mohammed Namel and Shahil Abdullah.
Just a sec. Nisha, I thought it was a presentation on pitch. I wasn't aware that this was a direct pitch like this. I think it works much better over here. Okay, I think let's start. Hello, Shaks. My name is Mohammed Namel. I'm the co-founder of Holly Tour. Well, if I were to ask you or anyone in this audience what your favorite hobbies are, most of you guys would have traveling on top of your list. Not right now, but the reason traveling is fun, but the process leading to traveling is not really that fun. So there's a tremendous amount of time, energy, and effort that you need to take in order to plan a holiday. And most probably it falls on women, wives, girlfriends, mothers to do that. So the problem is that it takes an awful amount of time to plan a holiday. Number two is that when you book any destination experiences, you will not be able to differentiate how one is different, seemingly very similar things. And number three is that you have to go on a lot of different places to book one single holiday. So that's where Holly 2 comes in and says that we have, according to your inputs, how many days, what kind of adventure or what kind of holiday you want, adventure, luxury, whatever it is, we'll spit out a plan to you, which will be customizable for you with all different experiences and having a hotel accommodation near to those experiences. And in one click, all your holidays booked rather than going to each individual experience and booking all those things. So that's what we are developing right now. It's not yet live. Very shortly, it will be live. So that's the product. We would be operating in both B2C and B2B on commission models. So we will be selling our products to B2B travel and tour companies who can then take the whole holiday plan all across the world and send it to any of their customer and get it booked on, which will be white label. With B2C, it's very similar to any of those B2C holiday companies, except that it's in one full holiday plan that can be booked. The reason we would be initially starting on the Middle East, Turkey, Africa, India markets, where the partnerships is very limited. Even global companies like Get Your Guide, Klook, they go to travel companies to get Burj Khalifa tickets. So we'll be working on direct partnerships. Me and my co-founder, I'll be looking after the fundraising. I'll be looking after the partnerships, the content. My co-founder will be looking after the product development, tech, and that side of business. The reason why we want to start over here in Dubai is because Dubai is the number 4 most visited tourist destination, and it is on its way to become the number 1 company. And as US has Airbnb, and Hong Kong has Klook, and Berlin has GYG, Dubai deserves to have a homegrown company in that particular segment. So that's where Hall 2 comes into play. So what we need right now from you guys is that I know that people like all we need is 1.5 mil as seed round.
Just kidding.
And you get to travel.
Okay. So can we hear your input, please?
I want to understand how you acquire customers. How much?
Well, our policy for acquiring customers is one, organic through content.
Our plan to acquire customers is mainly through organic, through content-driven website where people will come to read and understand and research a particular place where it will have its own SEO advantage. And for example, you're booking anyone wants to know what do I do what to do in Iceland. So what are the different things that you do? And you have different things. So it will be something where people will come to read as well. It's not just a booking platform like a Viator, where you just go over there and book. So it will be organic. The website will have a lot of organic traffic coming in from content, number one. Number two would be from digital marketing with SEO, Google Ads, SEM, and all those things. And number three will be with partnerships, with affiliates models, with airlines, hotels, and concierges, and limo drivers, taxi drivers. So a lot of, wherever there's tourist touch points, we'll have affiliate programs on there.
And you mentioned some of the competitors, right?
Yes.
That are doing this globally.
Yes.
What's the difference between a company doing this in Dubai, a company doing it in San Francisco?
Well, the difference over here is that they would just sell experiences, single experiences, without really customer trying to understand, is this experience better for me or that experience better for me? And they'll be selling only experiences. We are selling a whole holiday package, which is completely customizable. For example, someone comes to Dubai and wants to do an adventure holiday for 7 days. And we have put in as our, de facto adventure package, there's skydiving, and this guy is afraid of heights. He doesn't want to do that. So he'll be able to take that out. It'll be on a calendar like that. He'll be able to move the whole stuff. So for example, he can take, I don't want to do this on this day. I want to do it on this day because I have some meeting with family and friends. So like a calendar, it'll be there in front of you. And you can rearrange the whole thing from your calendar, share it with people who are traveling with you. And the best part is you don't have to book individual things. If you want to book individually, you still can do that. But the whole holiday will be booked in one click. So there's no portal that is there currently as we know it that does that. So that's where we'll be focused on holidays, the whole holiday plan booking rather than only experiences. And these guys, like the competitors that I just mentioned, they are not into content, except Culture Trip, who is based in London, and others are not really big on content.
Thank you.
Can I say that? Oh.
Yeah, sure.
So I really love the idea of having that calendar that's online that you can do the scheduling. I think that's actually really cool. I imagined it in my head right away. The one thing I would add to it is, how do you develop the actual plan for the person? And I'm just going to, as you were saying it, I remember one time when we went to Norway, what was really cool is that we actually contacted somebody from Norway. And we said, we want you to basically design an experience for us, for the next, 5 days.
Correct.
And that person designed something, and it was very customized to what a person in Norway actually does, versus, us being able to go on to, the regular websites.
Yes.
I think if you tried to do things that are ultra customized, I think there might be something there. I think once you start to get into kind of the generic stuff, let's go to Palm Dubai, let's go to, I think you might get, it'll be challenging.
Yeah, I am also running a tourism company called Travel right now in Dubai.
Yeah.
So what you just said is something that we do on a daily basis. So right now, as we are based in Dubai, we are starting with the Gulf countries because with the UAE, Qatar, Oman, Saudi, with the Expo 2021, Neom City, and all those things in place, initially started from here. I'm designing the whole packages right now because I've lived across the place, I've been in the industry. So in each country, as I say, in Norway, Iceland, Australia, New Zealand, all those people, we'll have locals over there. We'll be partnering them as sometimes freelancers, sometimes directly, because with the new condition, the whole point is about how you can leverage work from home and remote working and all those things. So get them to design the packages, and with AI, with the inputs that they are inputting into the system, what we want to do for how many days, AI will be taking out a plan and giving out to them.
So I liked everything you said until you said AI. I wondered how AI was going to work.
Yeah,
that's fine.
Yeah.
Thank you. Thank you very much. Good luck. Thanks. Okay. So the third startup for tonight, Ed Wallet. Athar Rizvi and Rasha Shamiya.
I got my first job. Hello, thank you very much. Thomas starts now? All right, okay. Thank you very much. I don't see sharks, I see some friendly dolphins. So thank you very much for that. My name is Athar Rizvi, and the concept that I'm going to present is EdTech. So we've spoken about payments, and this concept encompasses payments. So it's very simple, very straightforward. We pay school fees, period, right? What we do in this day and age is we drive down to school, most of us, we use our card, we use current dated checks, or we use a portal which is provided by a school, which is ultimately connected to a bank, and we do all the payment processes. EdWallet, as the name suggests, is a wallet, is a middleware, which will allow the user, i.e. the parent, to pay school fee, transportation, uniforms, books, extracurricular, everything that you can imagine that is required in a school in one single click by having a card on file. Imagine you're using your Emirates airline application. You book your destination, you click pay, and your ticket is booked. Imagine you're using Dubai now. Your Diva, Siva, Etisalat, Ndu, and everything is there in one single application. Imagine EdWallet as a single application for everything that is related for your school-related payments. This concept was developed 3 years ago. We have worked quite hard on that. We had a very good market research, a very solid market research on that. The TAM is 15 billion AED, that translates into 4.5 billion US per annum. The revenue model is very simple. We are going to charge the school and the parent both on BIPs. We will have an acquiring partner, let's say, I'm not going to take names, but any big acquiring partner. We're going to have a good buy rate, and then we're going to translate that buy rate into a profitable rate for us. We're going to have partnerships, collaborations, and there are multiple revenue streams. So that's it.
Thank you. 2 and 30 seconds. 2 minutes and 30 seconds.
This is
for the
how
record.
exactly I'm going to save the investment out of the 3 million US. Questions?
So, yeah, quick question from my side. You're basically making a spread on the acquirer?
Yes.
Is that it?
Yes.
Off of a nuanced business model?
Absolutely.
Are you gonna, how are you gonna approach merchant acquisition or your partnership side?
Okay.
Versus the spread? And then will the schools have to force or mandate the use of EdWallet?
Very good
Or do you have
question.
to go to the customer?
There is an authority in Dubai called KHDA. It is actually an authority that monitors and basically manages all the education institutes, whether they are schools, colleges, universities. Our plan is to go shake hands with them. This is part of the strategy. This is to, when we are talking about payment facilitation, you can imagine yourself as a parent or as a payer. Why wouldn't you use one single application that facilitates every means of payment? So you don't have to pay separately to STS, which is Dubai's largest transportation provider, connected with GEMS. You don't have to pay to a XYZ bookstore. You don't have to pay to a XYZ uniform store or whatever. All you have to do is just select the stream that you want to pay and just pay. This is the biggest motivational element that we're building. Number two, schools are using every school is using different ERP system. And then at the end of the term or quarter, you receive a link, or it depends on the school. So my son goes to Shoifat. They don't accept cards. They don't accept online payments. The only two ways of paying in Shoifat is current dated check or bank transfer. even during the COVID times. And I'm talking about Shuaifat, right? So what we have assessed during the past 2 years, and just on a side note, I'm one of the founding members of MBME, which was the largest kiosk operator in UAE, Maxbox Middle East. So in very early days, and so we used to provide them the complete technology support. So my love for aggregation and billers basically came from that area of business. So what we are trying to do is we are trying to become the aggregators of education stream. So be it schools, colleges, universities, recreation centers, extracurricular activity center, anything that you can imagine that falls under the education stream is going to be our customer. And as a user, as a parent, you're going to love it. Yeah.
I guess all I was going to say is, so you have an element of user acquisition, you have an element of merchant acquisition. So you just want to bake those into your unit economics as you assess how you're going to build things out. I'm sure you have them. Maybe
Yes,
the right form to discuss.
absolutely. Absolutely. We've got the complete strategy planned out, how we're going to acquire the schools and how we're going to acquire the parent as a user. Yeah.
Thank you. Thank you very much.
Thank you.
Thank you.
Talk later.
Okay.
Talk later.
Sure. So we won't be long. This is the fourth startup, Life Breath. Engineer Khan and Dr. Carol, are they here?
Thank you for the opportunity. The few of you are still left here. Well, I see a lot of successful people around. You have your expensive mobile phones, your Rolex watches, your wonderful cars, great mobile applications, private jets, yachts, and villas. But what I'm going to tell you today is going to really change your entire perspective and explain to you that what I'm going to tell you today is more important than all the assets which you have. So in 1 minute, to make it very simple, we breathe about 20,000 times a day. What is the quality of air which we are breathing? Irrespective of the place where you stay, the place where you work, the place where you spend most of your time, including your private aircrafts and private jets. What we do is that we measure the quality of the air and we tell you how safe it is for you, and we also give a solution on how we can make the air clean for you. The beauty of the entire thing is when you make the air clean and safe for an individual, a family, a plant, you also save energy. So we found that we not only make the place safe, but also save 25 to 30% of your electricity bill as a byproduct. The focus is to make the sick buildings around the world into green buildings, and with an ROI of 3 years. So we have done an extensive research in UAE, analyzed that any building which is more than 8 years old has never had its air ducts cleaned. So the air which you're breathing today in this wonderful place has a lot of carbon dioxide, VOCs, humidity, which is affecting your health, your concentration, your eyesight, the way you take decisions, and many other related illness. So what we try to do is we install sensors around the city. We monitor the quality of the air. We give information to the government and the individual entities, and we give them a solution for this problem of contaminated air. Thank you. Open for questions. I've made my point.
Good. So I think what you're doing is great. What I'd like to know is specifically how do you do it? So you have IoT sensors that sit in.
I have one here.
Right.
I just brought it. It says moderate. I'm in a premium area, and this is only the carbon dioxide levels now when we are few of us here. If this auditorium was packed, then it would have been unhealthy.
Right.
Who knows about it? Who's monitoring it? That's what we do.
So there's the monitoring part.
Monitoring.
And then what happens?
And rectification. So what we do is these sensors, they collect the data real time. And there is a unit called the fresh air handling unit in a building, which is supposed to give in the fresh air into the building. Now, these units have been designed 10 years before.
Right.
So there has been no upgrade. Now, what we do is we upgrade that system.
Yeah.
And by upgrading the system, we also make the entire system energy efficient.
Right.
And that's where the saving comes in. So straight away, any building which has an electricity bill of over 2 million per year is the target. And the quality of the air needs to be monitored continuously. So schools, malls, hospitals, residential township, villas, literally anybody who breathes needs our service. And we already have the technology patented. We won the UAE Innovation Award. And we have quite a few people who are very keen on investing in what we do.
So look, I mean, I think the business is a great business. I mean, we've seen other businesses that have done, similar to what you do, whether they're upgrading heaters, whether they're upgrading different parts of buildings. Great idea. I guess the thing that I'm going to ask is from a VC point of view, I mean, this is very capital intensive. This is much more of an ROI type of a business that you go for. It's not really let's say, a traditional technology business that we would have. It's very much a B2B one. I guess my question to you is how can you make this more of a B2C type of model? Something that, myself or Murad would be interested in to invest in.
Absolutely. So our idea is to make every home a smart home. Now, we have digital kits which can be procured online, installed in your bedroom, and from a remote location, we monitor the air, and we also give recommendations on how the air quality can be removed. It can be cleaning your carpet, cleaning your duct, or could be just planting indoor plants, depending upon the air quality. So what we do is we give a recommendation, we continuously monitor air quality and keep giving you recommendations on how you can improve the quality. Today, how many people clean their carpets? So this is a warning, like you have a car. Today, the smart cars say that your fuel needs to be filled, your air in the tire needs to be filled, your car needs to be serviced. But who takes care of the quality of the air, which is the most important aspect of your life? You can control what you're drinking. You have lovely bottles of wonderful water. You eat organic food. And then if you breathe contaminated air, then what's going to happen to your health?
Thank you very much. Thank you.
Welcome. Thank you.
So going on to our last startup for today, you know yourself. So, but anyways, Velocitia, Ashraf Alam.
Yeah.
Oh, sure. Thank you. Great.
Good evening, everybody. Thank you for inviting me. My name is Ashraf Alam. I am here for the one product I am bringing soon. And this is called Designed Ed. This product is basically for the people who are not tech friendly, who doesn't want to edit. Right now, in the market, what I see, there are templates. If you go, you can download if you want to share something in the social media, you have to work, you have to find the quotation, maybe some news, anything, or the pictures. So what we do here, we already created for you a largest collection, same like Netflix or the Apple Music, if you want to. So the purpose is to have a big collection. Right now we have like 10,000 already made up, and we are expecting like 60,000 to be soon at the time of the launch. And it will be like subscription services, monthly or yearly based. And it's simple. The app is simple. Like you go, you will see every day a new list. There is categories also. There are search system as well. But we try to minimize everything. Like the people we are considering as a target, they doesn't know how to. They just see, they click, and they can share. That's it. That 1 or 2, 3 clicks maximum. Thank you. Any question?
1 minute, 30 seconds.
Simple. So
Sure. Just trying to understand. So the value prop is you're going to have basically filters or skins that are preloaded, so template type, that people just apply to their content that they want to share across platforms.
there is, the thing is, we don't want them to create a content. We give already, it's already filled. That's why we are calling like 10,000. So we have a large collection of, let's say, motivational, or let's say inspirational, or something about fitness you want to share. If there are huge list of topics we are covering, so you just need to go, you see what you like, you click, and it's shared.
Oh, okay. So it's like, let's say somebody wants to create a motivational Instagram page.
Yeah.
Instead of every day them actually writing their own Instagram page and doing the graphics and things like this,
So
they subscribe to you and
Simple.
use the premium content.
So use, they just need to save their time. You just go, click, and share. So they can spend time on the other thing, like they can market their pages or something else. So content is here already.
Have you started monetizing, or are you still in the product development phase?
I have the demo ready. I can show how we are doing, because creating a content is a daunting task actually. So for this, I created another platform internally to have a faster system to get beautiful design. I'm also working like more than 10 years for the graphics, so I understand what kind of graphics makes people feel happy.
So it's kind of like a Canva. There's an element of a Canva that's there. But I assume you're probably going to price it, differently as well. Okay. And so if I come to you and I say, I want to create, let's say a car channel. Can you create skins for me so that every day I just come online and you can do this? So you'll do custom things as well.
Yeah, I am planning on the second phase. Let's say a lot of real estate people, they just want to have in their photo watermark, let's say.
Right.
It's easy. Just you upload hundreds of photo, and next click will you have hundreds of watermark ready. Or some people like, they take selfie, especially females. So they want so
yes.
I have in the pipeline the thing I am testing actually. My internal software is something like this. You just it's mass, like you upload 10, 15 and you get immediately. And the best part is like when you upload one photo, I have a color selection already from the photo. So the text will come. It has already color matching from the photo. So basically the time saving and easy.
And how much do you charge a month?
For the monthly, it's $9, $9.99. And for yearly, it's $99.99.
Okay, I'll try it.
Yeah.
Is it up and ready to go?
Not yet.
No, not yet? Okay, when you're ready, I'll try it. I'll subscribe.
Yeah.
It's great.
Okay.
Thank you.
Great.
Thank you very much.
Thank you.
Thank you, everyone. Thank you to our panelists, guests, and everyone who pitched their ideas. We hope you enjoyed our first Swimming with the Sharks event. Have a nice evening, everyone.
Thank you.
Thank you.